Well, let's get a little bit more on this and also some of the action that is certainly shaping the oil market at present. Tim Evans from Longleaf Trading Group joins us from the CME in Chicago. Tim, hello to you. Thank you for being with us. Firstly, would just love to get your take on this latest round of commentary coming through from the OPEC members.
Hi, nice to be with you today. Yeah, these comments I think are to be expected. You know, the OPEC oil minister and the various members that make up OPEC and participating members, you know, they need to begin the dialogue to kind of begin building momentum for the meeting later this month in Vienna. It appears as the OPEC minister has begun to do that. You know, I think he's more or less trying to instill confidence in the market and other members that may be, you know, doubtful in terms of what their intentions are with respect to extending this production cut past June. You know, so it's beginning, and we're gonna have a lot more of these comments here in the coming weeks.
So in terms of some of the price action, certainly we did see that fall last week, although we had a bit of a rebound in Friday's session. But looking to the week and indeed weeks ahead, what do you continue to see as being, I guess, problematic when it comes to that oil price action?
Well, I mean, I think this is, the price action that we saw on Friday, I mean, I think it's just a culmination of reports week over week, you know, showing especially excessive U.S. supplies. You know, the market seemed to be very disappointed last Wednesday, you know, when the draw was much smaller than expected. You know, this week on Wednesday, we're, you know, getting another one of those reports, and the market's expecting a draw of 1.8 million barrels. I think a big miss of that number could definitely be problematic for oil. You know, if we see, you know, that draw bigger than expected, you know, then I frankly think the lows that we saw on early Friday morning, you know, should hold as we, you know, move forward to the, you know, to the decision with OPEC at the Vienna meeting.
One of the question marks that has always remained over OPEC's action was really, I guess, investor confidence in firstly, whether or not they would even implement a production cut deal, whether they would stick to it. And now we have the question mark over whether or not they will, in fact, continue with that. Is there sort of questions over investor confidence in OPEC's ability to reduce that stockpiling?
Yeah, I mean, that lack of confidence is really building, and I would suggest, you know, based on the market action that we saw, you know, the market's losing that confidence and losing it pretty quickly. I mean, if you consider the size of the long spec position that's been in the market, I mean, that position's been stubbornly high for quite some time, and that's in the face of, you know, what arguably has been some pretty bearish supply numbers month over month. You know, given the calendar in which the Commitment of Traders report comes out, I don't yet know what that spec position looks like, but I would imagine that a lot of those longs went to the sidelines, you know, on that washout move that we saw early Friday morning.
But we also have, naturally, this is on the backdrop of a higher rig count now in its 16th week. One of the commentators that we speak to here in Sydney flagging that it's like the US wasn't aware of a global glut that we do have in oil, and just continue really with this pumping that we are seeing. So it continues to be this dual play. I mean, do you foresee a moving back in terms of that US production also?
Well, I mean, you know, the numbers coming in from U.S. producers is starting, in my view, to get pretty interesting. I mean, we saw last week Baker Hughes announced the 16th straight week of an increase in rigs. You know, and also, you know, kind of reading between the lines, the number of operating rigs has doubled relative to where we were last year. But what we are ultimately seeing, though, is the rate at which they're adding rigs has been declining week over week as well. It may be a bit premature to draw conclusions on that, but I think one could fairly suggest, you know, that the lower prices in crude oil that we're seeing are making it more difficult for U.S. shale to continue to add rigs at the very aggressive pace we were seeing earlier in the year.
And how do you see demand feeding into all of this? We are looking at a period of increasing global economic growth. Is that likely to boost demand?
It surely should. I mean, definitely. I mean, we're seeing, you know, improving macroeconomic sentiment. You know, in the U.S., China, Europe, not as much, but just the general sentiment in the market has improved. You you know, my view, and this goes back to conversations you and I have had, you know, since they implemented the production cut deal, is that you know, everyone was looking at supply, but the one variable in the equation they were using to determine their effectiveness to draw down global supplies was the demand number. And I thought at the time, and still continue to think so, that that demand number was a bit aggressive, you know, and time has proven it to be as such. You know, the Saudi Arabia oil minister today, you know, discussed that, you know, and discussed how that was a problem as we saw kind of a pullback in demand during maintenance season, you know, which prevented more or less the stockpiles from being drawn as they were hoping and expecting to see.
One of the items I did want to get your take on, in fact, was we had data coming through from China on Monday and suggesting that we did see Chinese imports falling, suggesting some weakness when it comes to that outlook for the tiger economy. How closely are you watching this when it also comes to that supply and demand story?
Very, very closely. I mean, because really, when you're kind of looking at the globe, you know, where is the demand ultimately going to come from? I mean, I don't think any economist that's analyzing this scenario is looking, you know, for any big change in demand out of Europe. I mean, the two areas in the world that, you know, can really put a dent in these supplies are in the U.S. and China. You know, that March number, you know, was a record number in terms of exports to China. You know, the April number showed a 9% pullback, you know, from that March record. You know, we don't know yet, obviously, if that's going to be a trend that's developing, but it's something that definitely worth paying attention to, and to be concerned that if we continue to see pullbacks, you know, in that growth amount, yeah, I mean, obviously, you know, coming to balance over time is going to be that much more difficult.
Tim Evans, we will leave it there. Thank you very much.
Thank you. Have a nice day.
Well,